Arbitrum is currently trading at 40 cents and $93, and this looks like one of the most compelling setups we've seen in a while. We're sitting in deeply oversold territory, which historically has been an excellent spot for counter-trend bounces in the crypto space. The recent sell-off has pushed ARB down to levels that are screaming oversold on multiple timeframes. We tested the 40.016 support level, which coincides with yesterday's low, and so far it's holding. This is a critical level because a break below here could send us down to 37.67, but I'm not expecting that to happen based on current market structure. Here's what I'm seeing for the next 3 trading sessions. We should get a bounce from these oversold levels, with the first target being 43.12. That's about a 5.5% move from current levels, which is very achievable given the rubber band effect we're seeing. If we can clear that level with conviction, the next stop is 44.85, followed by the key resistance at 46.28. The really exciting part is that if this bounce gains momentum, we could see ARB push all the way back to 48.90 within the next 72 hours. That would represent nearly a 20% gain from current levels, which might sound aggressive, but remember we're dealing with extremely oversold conditions here. For entry strategies, I like the current levels around 40.093, but if you want to be more conservative, wait for a break above 43.12 before adding to positions. Your stop loss should be placed below 40.016, that's your line in the sand. If we break that level, the setup is invalidated and you need to get out. The daily volatility we're expecting is around 3.1 cents, which translates to roughly 7.5 to 8% daily swings. That's significant enough to make some real money if you position correctly, but also enough to hurt you if you're on the wrong side. My confidence level on this bounce is around 70%, which is pretty high for crypto. The technical picture is just too compelling to ignore. We've got oversold momentum, a solid support level holding, and the kind of setup that usually leads to sharp reversals in this market. For position sizing, I'd suggest going with a moderate allocation here. Don't bet the farm, but this is definitely worth taking a swing at. The risk-reward is fantastic. You're risking about 2.5% to potentially make 15 to 20% if this plays out correctly. The key levels to watch are 43.12 for initial confirmation, 44.85 for continuation, and 46.28 for the real test of strength. Above that level, we start looking at much higher targets. Below 40.016, we're probably wrong about the timing and need to reassess. This is the kind of setup that separates good traders from great ones, having the courage to buy when everything looks terrible but the technicals are screaming opportunity.